How to borrow money from your IRA without tax. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. I'm going to talk to you about how you can actually borrow money from your IRA without tax. Is it possible? Yes and no. So when it comes to taking money out of the IRA or a Roth IRA, you have to understand the parameters and the framework of a distribution rules. So the way the distribution rules work are as follows. If you're under 59.5 and you take money out of a pre-tax IRA, tax plus a 10% penalty. Over 59.5, just tax. On a Roth IRA, the contributions you make to a Roth IRA, you can take out anytime you want tax-free. But the earnings on that contribution, meaning if you put in $5,000 in a Roth IRA last year and you buy Tesla stock and now it's worth $8,000, that means there's $3,000 of earnings on the contributions. Now those earnings are subject to tax and a 10% penalty if you pull out before 59.5. But if you wait till you're 59.5 and the Roth's been open at least 5 years, then it's all tax-free. So how do you pull out money tax-free? Well, there's one way, and that's called a 60-day indirect rollover rule. So in the case of a traditional IRA or a Roth IRA or a SEP IRA or a simple IRA, you have the ability once every 12 months to pull money out of your IRA, tax-free, penalty-free, and use it for any purpose. But you got to put that money back in the respective retirement account within the 60-day window. So it's not 61, it's not 65, it's 60 on the dot. If you fail to put that money back within 60 days, the amount you took out is subject to tax and a 10% penalty if you're under 59.5. So you can't take the money out, buy a house, and put the house back in the IRA. If you pull cash out, you got to put cash in. So the 60-day window is really the only way you can pull money out of an IRA, tax-free, penalty-free, if you don't have a Roth. If you have a Roth, then you need to wait until you're 59.5 and the Roth's been open 5 years before pulling money out of your IRA without tax. That, unfortunately, is the only way you're going to be able to do it. On the pre-tax side, that 60-day window will basically be your only option. On the Roth side, you need to wait till you're 59.5 and the Roth's been open at least 5 years.